Raising capital is a critical step for entrepreneurs and small business owners who need funds to start, expand, or maintain their ventures. While traditional loans from banks and financial institutions are often a go-to option, they are not always the best choice for every entrepreneur. Loans come with interest payments, strict approval processes, and repayment terms, which can put a strain on cash flow. Fortunately, there are numerous ways to raise capital without taking out loans. In this video, we'll explore the top 10 ways to raise capital that don't involve taking on debt. 1. Bootstrapping. Bootstrapping refers to funding your business using your own savings or revenue generated from your business activities. This is one of the most common and straightforward methods of raising capital without loans. While it requires having personal savings or being able to reinvest earnings back into the business, bootstrapping gives you full control over your venture without the pressure of outside debt. It also encourages fiscal responsibility as you rely on existing resources rather than borrowed funds. 2. Angel investors. Angel investors are wealthy individuals who provide capital to startups or small businesses in exchange for equity ownership or convertible debt. Unlike traditional loans, angel investors are typically more willing to take risks on early-stage companies with high growth potential. In addition to providing capital, angel investors often bring valuable business expertise and networks to the table. If you can pitch a compelling idea or business plan, angel investors may be interested in supporting your venture. 3. Venture capital, VC. Venture capital is funding provided by firms or investors to startups and small businesses that have high growth potential in exchange for equity. While VC investors often seek businesses that can deliver substantial returns, they typically take a hands-on approach to help scale the business and increase its value. This is an ideal option for businesses that are beyond the startup phase but still require significant capital to expand operations. While it doesn't involve loans, venture capital often comes with the trade-off of giving up some control over your business. 4. Crowdfunding. Crowdfunding platforms like Kickstarter, Indiegogo, GoFundMe, and Crowdfunder allow individuals to raise money from a large number of people, usually through small contributions. Crowdfunding can be an effective way to raise capital for a project, product, or business idea without taking on loans. In exchange for donations, backers may receive rewards such as early access to products, special discounts, or equity in the company. Crowdfunding also serves as a great marketing tool to build interest and generate buzz for your venture. 5. Grants. Various government programs, private organizations, and nonprofits offer grants to businesses, particularly those in specific industries such as technology, healthcare, renewable energy, and education. Unlike loans, grants do not need to be repaid. While the competition for grants can be intense, they are an excellent way to raise capital for specific projects or business growth initiatives. Be sure to research available grants in your industry and geographic area to find opportunities that align with your business goals. 6. Equity crowdfunding. Equity crowdfunding platforms such as Crowdcube, Seed Invest, and WeFunder allow businesses to raise capital by offering equity in exchange for investments from multiple backers. This method allows small investors to participate in early-stage funding opportunities and share in the company's potential growth. Equity crowdfunding has gained popularity as it offers an alternative to traditional venture capital and angel investors, giving entrepreneurs the chance to raise capital from a wider pool of investors. 7. Revenue-based financing, RBF. Revenue-based financing is a form of funding where investors provide capital in exchange for a percentage of your future revenue. Unlike loans, there are no fixed repayment schedules, and payments are tied to your revenue, so they fluctuate with your earnings. This flexible model makes it a suitable option for businesses that may have inconsistent or unpredictable cash flow. RBF allows you to raise capital without taking on significant debt, and repayment is tied to the performance of the business. 8. Pre-sell products or services. Pre-selling products or services is an effective way to raise capital without loans, especially for businesses with a tangible product or service. By offering customers the opportunity to purchase in advance, you generate immediate capital that can be used to fund production or operations. Pre-selling also validates the demand for your product, helping you gauge interest before making a significant investment. Platforms like Shopify and Etsy can help you set up online pre-sale campaigns for your products. 9. Partnerships and joint ventures. Partnerships and joint ventures involve collaborating with other businesses or entrepreneurs to pool resources and share capital. In exchange for sharing the profits or equity, your partner contributes funding, expertise, and resources to help grow your business. This model works well if you can find a partner with complementary skills or resources that can help you reach your business goals. Joint ventures often allow you to access capital and resources without taking on debt or relinquishing full control of your business. 10. Friends and family. Raising capital from friends and family is a common, albeit sometimes controversial, option for entrepreneurs looking to avoid loans. By borrowing from friends and family, you can raise the funds you need without going through formal financial institutions. However, it's essential to approach this option with caution, as it can strain personal relationships if things don't go as planned. Make sure to formalize the terms of the agreement, including repayment schedules and expectations, to avoid misunderstandings or conflicts. Raising capital without loans is possible, and there are numerous creative ways to fund your business. Whether it's through bootstrapping, attracting angel investors, or utilizing crowdfunding, each option offers distinct advantages and challenges. The key to success is finding the method that best aligns with your business goals, risk tolerance, and long-term vision. By exploring these capital-raising strategies, you can secure the necessary funds to fuel your business growth while avoiding the pitfalls of taking on traditional debt. Be sure to weigh your options carefully and consult with financial advisors or mentors to help guide you toward the most suitable funding approach for your business.